Well, morning traders, super quick update for today. I'm going away for the weekend, so I'm going to do this before I hit the road. I'm also going to be filming a video for my travel channel. It's just a bit of fun, but there will be a link of it in this video and in the description below, so go and check it out. There are only 2 videos on there, but I'm just doing it for a bit of fun. Let's talk about the markets. We can talk about the dollar index. So we've got some good news on dollar bills here, still holding above the trend line, which I've just sort of drawn in now. It's not a great trend line. We've only got 2 points touching it, but it's pretty good, pretty indicative of what's going on. And we've got the 20-day moving average moving up. And these are our 2 zones, which I've just drawn in with a nifty rectangle tool on TradingView, which I didn't know you could extend to the right and the left, but now I know it. So we've got our resistance above us and our support below us, and we're in the middle, but edging up towards the resistance. We had a good rally on the dollar yesterday, which pulled down the euro and the pound. What we want is a break through this resistance level, and that's between 105 and 105.40 or so, above those highs. Then we want to get through this 100-day moving average up to the 200. That'll take us to 106 in between those 2 moving averages, and then 107. So that's the positive scenario for the dollar bills. The negative scenario is, of course, if we break down below the 20 moving average and the trend line and fall back into this pocket down here, which you can see why I've drawn it in, previous support and resistance, pretty clear level. It's not a precise level, that's why I've drawn it as a rectangle, as the same applies to the one above. So those are the 2 levels, and somewhere in between, that's where we are at the moment, and we really want to see this getting up. Now, there are loads of reasons to be bullish on the dollar, fundamental reasons, and it's got to do with interest rates and bonds and economies and inflation and loads of different things. But I'm not going to go into that. And fundamentals, often the price can lag behind fundamentals. So a lot of the time we rely on the technicals in cahoots with the fundamentals. So the fundamentals are saying dollar should be bullish, but we may still get some thrashing around. And who knows, there could be a curveball, and we may end up losing a wicket, as they would say in cricket parlance, or perhaps a batter in baseball or whatever. So that brings us to the euro and the pound. Let's have a look at the euro. Basically, we're still short the euro. We had a nice down day yesterday. I did put a short video up about this resistance level and the 20 MA, which we touched the day before yesterday. Yesterday was a nice down day as the dollar rallied, and we've still got our sights set on this level down here. This is the Fibonacci level at around 1.05, and then ideally we'd get down to 1.0350 or 1.03 with the next Fibonacci, the 50% and the 200-day moving average line. But once again, all of this stuff really depends on how the market interprets what's going on with the Fed. Don't think we've got NFP jobs today, but I think if the jobs numbers come out strong, I don't know why it's not today. I haven't even investigated, but it's next Friday. It's normally this Friday, first Friday of the month. Again, if we get a strong jobs number, it's going to be really dollar positive, because strong jobs number is always dollar positive, no matter what else is going on. In general, that's the overarching rule. But it would also be dollar positive because it indicates that the economy is still not slowing down enough for the Fed to be comfortable with slowing down the rate of interest rate hikes, which will be more aggressive probably than in Europe, where we have equally bad inflation and problems like that, but the Fed's likely to be more aggressive. So that would be dollar positive. So look out for that when that job number comes out. NFP on Friday, next Friday, I think. Correct me if I'm wrong in the comments. I'll look at it after this video, of course. But if we get another strong jobs number, we can expect the dollar to rally and the euro and the pound to drop further. We might have to wait for a week before that happens. So that's all of that. And then looking at the yen pairs, again, I'm not going to go into detail on the dollar yen. A couple of videos and tweets on that. Go and have a look at those. My strategy for the dollar yen. I'm short at the moment already at this level. There's every possibility we could rally up to any of these levels. So I'm short, but I'm also hedged. So I've got a short position, a small one, and I've got a hedged short and long position, and I'm willing to adjust that hedge as the price moves either up or down. There's a strategy video on that, which I'll link to the end of this as well. The same with the Australian dollar yen. That's the other one that we're in short. I've done loads of videos on that. There's nothing really to say more than what I've already said, but again, we're looking for a move down. They might both move down, actually, dollar yen and Aussie dollar yen. We'll have to see how today pans out, but we're looking for a move down through this lower channel line and down towards first support at around about 88 or 87.50. So go and have a look at those videos. Let's talk about gold and silver. Gold, we're right up in this resistance pocket at the moment. We shorted it, took a bit of profit yesterday. We short again today. Whether we're going to hold beneath this 20 SMA and this resistance level, I don't know. I haven't drawn all the fibs in here. Let's just draw one quickly. But we're aiming for the next Fibonacci level which is at around about 1800 to 1880, 85. So call it 1800 to 1780, in that region there. And then failing that, we might even get down to 1740 or 50. But we've first of all got to hold beneath this current resistance level, which is also a Fibonacci level of the move from the top to the bottom. So it's a pretty key area. So we've got all of this going on here in this sort of pink zone, which has turned a gray color on top of this green area. So that's what we're doing on gold. I don't know if we're going to drop down or carry on up. A lot of people bullish on gold, which makes me worried about the bullish scenario. So we'll have to see what happens. And silver will probably follow suit. We're not going to do too much about silver. Now, let's go across to the stock indices. We're long on the Standard and Poor 500 index. We bought at the bottom yesterday, took some profit, and we've just bought again. It retraced a little bit at the end of yesterday, and we've just bought some more S&P, looking for a rally up into these resistance levels and eventually up to 41.80. And we're in at around 39.70. Any dips down to this level? We had a lovely day yesterday. My buying area was literally down here where my cursor is. We got in there at 39.34, I think, just above this downward trend line on the S&P. I'm not going to talk about the, well, let's just finish with the S&P. So there's that downward sloping trend line we touched. It's always good when you have downward trend lines and you've broken above them like we have here, to keep that trend line in, even though it's been broken, because it then becomes a support level if you approach it, if we fall back down onto it from the top side, which we did yesterday. We then got this beautiful reversal candle yesterday, having bought at the bottom. We took profit pretty much at the top there when it hit the 50-day SMA, and it dropped down overnight, and when we're back in long again at the current price, slightly lower than where we are at the moment. We've already rallied a little bit on that, so we're hoping for that to move up. And you can see on the NASDAQ a very similar sort of picture, perhaps even prettier. Beautiful touchdown. We did close above this is the 200 period SMA on the daily chart on NASDAQ. We did break through it. We touched the 50-day SMA and that red support line absolutely perfectly. You couldn't be better, really. So if you were buying NASDAQ down here, which is what my plan was, but I decided to go with just S&P instead of both of them because they were likely to behave in a similar fashion. But here we just broke down, touched the 50, touched the support, broke down through the 200 SMA, pulled back up again, and we got a nice bullish reversal hammer candle pattern. And that's what we want to see for the bullish side of stocks. Overall, I'm a stock bear, but I think we've still got some more bear market rally left in us. So watch out overhead, because I think we might be going quite a lot higher on both the S&P and the NASDAQ. And again, that sort of spike low or wick low, not quite a hammer, but more of an engulfing candle on the S&P. So perhaps a better candle pattern, both equally as attractive for the long side. Could be a good Friday. It's the end of the week. First Friday of the month. Could be a good one. Could be a good bullish day for stocks overall. And that might actually drag gold up with it, but that's one of those things. At least we'll be on the right side of one of them. Bitcoin breaking down through support. I'm pretty bearish on Bitcoin. I think we've got a long way to pull back down into the 20 level, down to these two moving averages. That's the 100 and the 200-day moving average. However, having said that, if we do get a good rally in stocks today, it'll probably drag Bitcoin up with it. So we might actually be touching these highs at around 25,000 again today. Who knows? I'm not trading Bitcoin. Brent crude oil just up a wee bit. I'm not trading that, but this looks like a pretty constructive pattern overall. It could be construed, if you draw some lines in here, it could be construed as a bear flag, I suppose. But I think overall, I'm quite happy that we might get some extra strength in Brent crude oil. There's the sort of bear flag, if you wish. Are we going to break down through the bottom, or are we going to try and get up to the top? I think we might try and get up to 97 and negate this flag pattern, or at least perhaps the top of the flag. And that would take us to around about $90 to $91 on Brent crude oil. Again, I'm not trading this one. I'm more interested in, when you're coming to the energy sector, more interested in natural gas at the moment. So here's natural gas. I must say, still looking surprisingly strong. I've done a couple of videos on this one. Go and have a look at the video I did yesterday or the day before on natural gas. We've got our very key levels. I did quite a detailed video on natural gas, so I don't want to go into that in this video and waste too much time. But we've got our target area up above us at $3.50, $3.40, 50, 60, and we've got our two support lines below us. And then below these support lines, we've got the $2, $1.97 level, which we could break through if we see more weakness in natural gas. I have a feeling if we're going to go one way or the other, I have a feeling it's going to be up first and then down, rather than down and then up. So I'm still long on this. I'm willing to hedge a position if we break down and close beneath the support level at $2.60. and then I'm willing to add some more longs on at $2.35 and wait to see what happens after that. If we carry on rallying up right now, my profit taking area is at $3.50, and then I'll be waiting for, I won't be shorting it, but I'll be waiting for, I might actually be shorting it depending on the candle formations. I'll have to think about that next week. I'll be looking for a move back down from $3.50 or so back down to $2.60. So that's the range within which we're trading, and we'll have to see how that plays out. Please, if you're interested in natural gas, and I know a lot of people are, go and check out the videos, the last 2 videos on my channel, and also subscribe to the channel if you enjoy this sort of content, and press the notification bell, like the videos. It helps the channel and it encourages me to put more of this sort of information out there for you to absorb and to act upon if you want to. So that's natural gas. And the only other one I want to touch on today is soybeans. I did put some stuff up on soybeans on Twitter, and I also put out a very short video on this channel about soybeans. But I've been short. I was short at the top on soybeans, took profit on this move down. It's bounced back up again. It's hit the 50-day moving average. We're just near this resistance level that has been formed over time, recent time, and in the past as well. And I'm looking to sell. I've taken a small short position on soya, but I'm willing to sell all the way up into this area here at 1,600. 1600 or 160, but I've started selling now at about 15. My target on this is actually 1350 all the way down here. So that's soya. Have a fantastic trading day, and don't forget to go and check out Arcis Travel. I'll put a link up. It's just a bit of fun, and I'm taking a video. We're going to Cape St. Francis this weekend. It'll be interesting to have a look at that. It's a very beautiful part of this coastline of South Africa. There's an old lighthouse and a brilliant surf spot. That's where I'll be this weekend. Hope you all have a fantastic weekend too.